Hey everyone, and welcome. Today, we're looking at a property that on the surface seems to have it all. A world-famous brand, an absolutely unbeatable location, and six-star luxury. But does all that glitter really mean it's gold for an investor? We're diving deep into the investment memo for the residences at the St. Regis Kuala Lumpur to uncover a really fascinating paradox. Let's dig in. So everything really kicks off with this one big idea. The memo immediately calls this a trophy asset. Now, that's important language. It sets the expectation way up here. We're talking prestige, exclusivity, and top-notch quality. This isn't just a building, it's a statement piece. And the two pillars holding it all up? Location and brand. Let's see what that really means. All right, first things first. Let's get under the hood of the product itself. What exactly makes this a six-star branded residence? What does that even mean? Okay, let's get the basics down. We're talking about a building that was finished back in 2014. And get this, it's freehold. That is a huge deal, right in the heart of the city. The developer was a joint venture. And its location? Well, it's right at KL Sentral, the absolute engine room of the city's transport network. So right off the bat, you're looking at some seriously solid, top-tier fundamentals. And this is where we get to a really key concept, the branded residence. You know, this is so much more than just a fancy apartment. When you buy here, you're basically buying into the entire St. Regis ecosystem. I'm talking personal butlers, in-residence fine dining. You get access to all the hotel's six-star perks, but it's all in the privacy of your own home. It's not just a place to live. It's a full-on lifestyle product. So who exactly is this lifestyle for? Well, the marketing doesn't exactly beat around the bush. We're not talking about your average homebuyer here. The target audience is literally presidents, prime ministers, the absolute captains of industry. This extreme level of exclusivity is a huge part of its brand. But, as we're going to see, it's also one of its biggest challenges. All right, so with that kind of reputation, you'd be thinking this has to be a total slam dunk investment, right? I mean, how could it not be? Let's build the case for why, on paper, this thing looks like an absolute sure thing. The whole investment idea is built on these four incredibly strong pillars. You've got the world-class St. Regis brand, that speaks for itself. You've got that super rare freehold title, and you've got these amazing protected views over the huge lake gardens. But honestly, the real superstar here, the one thing that holds it all together, is its connectivity. And this just shows you exactly what I mean. A quick, maybe 7 to 10 minute walk, and it's sheltered, by the way, lands you right in KL Sentral, which is Malaysia's biggest transit hub. From that one spot, you can get on 8 different rail lines. That includes the express train straight to the international airport. Now, if you're a top-level executive or a diplomat, that is an absolutely unbeatable advantage. Time is money, right? And, of course, that amazing connectivity translates directly into rental demand. Because you've got this steady stream of high-level corporate folks and diplomats who value convenience over everything else, the property can charge some seriously high rents. That leads to a really healthy estimated rental yield of 4.3%. So everything's looking pretty great so far, wouldn't you say? So this is the logical next step, isn't it? With a brand this powerful, a location this perfect, and a rental yield that strong, the property's value, its capital appreciation, it must have just skyrocketed since 2014. I mean, it has to have. Well, this is where our story takes let's just say a very surprising turn. Okay, so let's stop talking about what should be and let's look at the actual data. Because the numbers behind the price performance, they tell a completely different story from what the glossy brochures and prime location would have you believe. Just take a look at this chart. The price per square foot for this property actually peaked way back in 2017 at almost 3,000 ringgit. But today, the median price you see for a transaction is just over 2,000. Now, that is not just a little dip. That is a significant drop from its all-time high. So here's the knockout punch. Instead of growing in value, this asset has actually shown a negative year-over-year capital growth of over 8%. Let that sink in. For anyone who invests looking for capital gains, you know, the profit you make when you sell, this number is a massive flashing red light. Now, this downward price trend isn't just happening out of nowhere. It's really a symptom of several deeper risks that the investment memo points out. So we need to peel back the layers here and really see what's going on underneath. So here they are, the 4 critical risks laid out for us. We've already seen that proven negative growth, but then there's the incredibly high price point, the total cash you need to buy one, which you can imagine drastically cuts down the number of people who can even consider it. Then you have the risk of the unit just sitting empty. vacancy. And finally, something anyone in KL knows, the brutal daily traffic congestion right around that area. And this slide just nails the core problem perfectly. The very thing that makes it so exclusive and attractive is also its biggest weakness. The pool of people who can afford to rent here is tiny. We're talking top C-suite execs, diplomats. And the pool of people who could actually buy one, even smaller. It's limited to the ultra rich. So when you decide it's time to sell, you're not putting it on the open market for everyone. No, you're waiting and waiting for a very specific and very rare type of buyer to show up. So here we are with this paradox, right? An asset with world-class A+ fundamentals that is actually losing value. So how do we make sense of this? Well, the final verdict really comes down to figuring out who this investment is actually for. And here it is, the conclusion in the clearest possible terms. If your goal is aggressive capital gains, to buy this place and flip it for a quick, fat profit, this is absolutely the wrong asset for you. Full stop. But if your goal is stable, predictable income from a super high-quality rental and you want to preserve your wealth for the long term in a blue-chip property, well then, it's a perfect fit. So, at the end of the day, the St. Regis is really for a very specific kind of investor. We're not talking about a speculator here. This is for someone who isn't losing sleep over short-term market swings. They are buying stability. They are buying brand prestige. And they're buying that reliable 4.3% yield. They are buying a trophy to hold, not to flip. And that really leaves us with one final thought to chew on. In a world that feels so economically uncertain and with markets all over the place, maybe, just maybe, our whole definition of a winning investment needs a rethink. Is it possible that the real prize isn't that explosive, risky growth anymore, but the rare security that comes from predictable stability? In a world this crazy, it's definitely a question worth asking. Thanks for joining me.